Merry Christmas, everybody. Hopefully everybody's having a fantastic week. It's kind of slow out there, no doubt about it. December's open is holding as resistance on Bitcoin. We'll talk about reasons why here in a minute. We got GDP and durable goods coming out here in 1 minute. Currently, I'm short Farcoin from previous 4 hour swing high with a very tight stop, and long Pingu from 4 hour swing low down here at support. Not swing low, but at 4 hour support. Don't have any idea which way everything's going, but we'll see. Whichever one of those survives, that's the one we'll keep open. Yeah. Let me go ahead and make sure I got stop set on both. Oh wait, I just accidentally exited the Farcoin. It's all good. It's one of those days where literally anything can happen. Just looking for a spike here. Yeah, I'm not going to be able to jump back in the Farcoin short, unfortunately, because of where it is. Oh wait, maybe here. Let me see. Yeah, no, that kind of screwed me really bad. I was short from this right here. So you can see the Pingu long is going to be pretty much just at support. Everything is weak. Obviously, when everything is weak as it is, you would want to be short, right? Generally speaking, but it is what it is. We just sometimes will hedge off, especially on those what could potentially be a weekly low or weekly high. Like Pingu could have set the weekly low right here. It's Tuesday. I know this trade doesn't often work in this year in 2025, but it's still hard to break old habits, I guess. But then Farcoin was up here. A lot of volume here. This isn't what I want to see though. I want to see December's range only. So you can see how Farcoin, if you look at the month of December, the volume in the December candle, you're under value here down in this area. So anything under the highlighted portion of the volume profile is considered under value. That doesn't necessarily mean it's going up. It kind of speaks to the fact that it's a lot oversold. You know what I mean? It got hit really hard last week. This week just opened, but that's where I'd be looking for the short. If I was interested in shorting Farcoin today, it would be right here. Just right at the swing high, because if it's going to roll over, we would expect it to roll over from there. It's not a day high because this is your day open, or your day high is all the way up here, up next to the weekly volume weighted average price. So if we're trading above this, just this swing high, which is the weekly open, if you're trading above that, then where are you probably going? You're probably coming up here. So there's no point to set in a short if you're trading above 29.09, because the next area to look for the short would be 29.65, and that's if you're going to be a weak, right? If you're going to be a down week, then shorting at the week open is generally a good place to look for shorts. If you reject going lower at those prices, then clearly it wants to retest last week's range. Last week was a devastating week for Farcoin, but it couldn't get any continuation. And that's literally been the story all month for Bitcoin as well. There is no continuation. So here is December's data, just the data in December. Set a monthly swing low real early in the month, the first day of the month. Then on Tuesday and going into Wednesday, you set the monthly swing high. Fell back into about the midpoint of the monthly range, smoked the high, and then rolled over. But did you smoke the low? No, you haven't yet. Since you're trading under the open here, VWAP, the monthly volume weighted average price, it's showing weakness. The thing is, though, averages are not helpful in choppy markets. We know this to be true, whether it's a price average or a moving average, right? An exponential moving average or a simple moving average. It's just the average of price over a specific amount of time. Well, a volume weighted average is also just an average, but in a choppy market, averages are not useful. They're not helpful. It can show you weakness, but it doesn't mean you're going to get continuation, if that makes sense. So when you're choppy like this, it is a difficult trade. It's when you take your trade, you just take profits quicker. If you get the move in your direction, you just essentially just take profits earlier, simply because you're not getting continuation. And then if you are positioned, we got the news. Obviously, the market didn't really do anything. S&P 500, it hasn't done anything. We got a fresh year low on the VIX. That's kind of another reason why I have a slight bullish bias this week. Christmas rally, not so much. It's mostly the way the market's structured here. Bitcoin is still extremely weak. I mean, you're right on the month. So I'm not super bullish, but when you have a super weak VIX like this is a fresh yearly low. Markets should be making fresh yearly highs. They're not doing that. But the weekly range for the S&P is more bullish than bearish. As right here's where you closed Friday, and yesterday you're up. But range for this week, very tight, 65 points. Very small. And Ethereum is breaking under support here. Bitcoin trading down to test support, so that probably means this is going to get stopped. Let's see what the news said. GDP, wow, negative. Oh, that's sorry, durable goods. Phew, getting ready to say that would be terrible. GDP up. Holy cow, that's a huge beat. They were expecting a 4 point, here, let me show you. They were expecting a 3.3 for this month, or this quarter, sorry. Got a 4.3. Durable goods weak. Forecasted negative 1.5. You actually got a negative 2.2. So the Pingu trade just got smoked. So let's see what it does right here. Damn it, I wish I would not have accidentally exited that Fartcoin short. That's all right. I have another short on XMR, but so this is the swing low that I would be focused on, or at least looking to mitigate risk from. Not so much this one, but you've already liquidated it, so it doesn't really matter, right? But I don't want to be long if price is pushing under that point. So let's go into the Fartcoin here pushing down. So same thing, right? I don't like the structure for longs. The structure is bearish. You're under the month open. You're under everything. And Fartcoin is trending. As this is December's range here on Fartcoin, you actually made a fresh month low. So that means you're trending. When you're making fresh highs or fresh lows, you're trending, right? So this is trending. Did it bounce after making a fresh monthly low? Yeah, but the trend is still to the downside. So in the spikes or in the bullish bounces, you typically look for the short if you're anticipating that trend to continue. It's the end of the month. It's the end of the month. Not a whole lot to do. Good morning, everybody. Hopefully everybody's having a good week. This week is going pretty good for me. I got long XMR over the weekend. I bought XMR right here Friday evening. As it traded down into this swing, I just bought it and it broke out over the weekend. So I took profits on that trade. And then yesterday last night I was watching this area in here because ZEC had rolled over. We were watching ZEC down here. We wanted to see this area hold. Yesterday morning, we were watching in this area looking for the breakout. The breakout failed and then it rolled, broke under, closed under. So I was long in here on ZEC. That trade got stopped out. The XMR trade made money. So because this broke down, it made me a little bit nervous about holding the long on XMR from here. So I took profits on the move up, made 600, left the position open, and then last night decided to close the position and then open the short right in here at the week open. Why? It was early on in the week, but it was trending. It was making, so that was your weekly low right there. You took out that low. So theoretically speaking, if you were going to see an upside move on the week range, because there's your week open, you would smoke that low and then retrace back into the range and start heading back up to the highs, right? Well, that's not what happened. You closed under the low and then put in a downside continuation candle, making a fresh weekly low. So as price pulled back into the week open and into the weekly VWAP, that was my short side entry. And then here we are this morning. Boom. So, I mean, going into the weekend and the short trade have both paid very nicely for this week. Just those two hits basically made the whole week. But we'll see if there's going to be downside continuation. There was a little bit of time where I kind of thought XMR was trading the opposite of Bitcoin. So if on days where Bitcoin would be bullish, we would be looking for weakness on XMR. But it was very simple price action. If you're making fresh weekly lows, then when you bounce, as long as you're rejecting the week open, you look for the sell because you've made 2 fresh week lows. That makes sense. And that's what trend following is, right? We're looking for the trend, but when we're day trading, we're looking for the trend on a much smaller time frame. So generally intra-week and intra-day. And very, very simple trades to make and take. So you can see closed out $600 worth of profit this morning on the XMR trade. My entry was not as good as I wanted it to be. You can see how I did not get in on that fresh week open test all the way up at the high. I actually had to go to the store. When I got back from the store, we were trading in this area. So basically I just had my stop setting at the week open. So if we proceeded to push back up into the weekly range above the week open, then I would be stopped out. And then I went to bed and I woke up this morning down here and this candle was pushing up. So I took profits. Now you can see I have another limit sell setting roughly in this area. That's just, it'll bring my cost basis down, but it'll put me back in with a much bigger position. This is too small. This position won't do anything really. I mean, you have to move a lot to make the same amount of money. So if XMR is going to potentially have another 6% move to the downside here, I don't want to just generate $200. I would like to generate about $600 on that if possible. So this will bring my cost basis down, and I'm only interested in setting in this position if it shows weakness below that 4-hour swing. So it can go up, right? I just won't take the trade if it's pushing up, but I need to see rejection here. I do not want to see it trade higher. If it starts to trade up into this area, then there's a really good chance, or a real good chance you're probably coming back to retest the week open. And remember, you can't see it on this chart, but the week open is up here. This is your week open candle. So that's your week open right there. Now I might not get filled, obviously, but I put it up here just in case we had a spike from the news. Crypto markets don't trade with S&P that often, but sometimes they do. We got 9:30 New York session open coming up here in about 45. I actually thought the GDP print would be a lot bigger event, but Bitcoin's literally not doing anything. But let's get back to Bitcoin and let's talk about Bitcoin on a long-term analysis here, because I know a lot of people come for the live stream. They just want to get what I think Bitcoin's going to do long-term. We're getting ready to go into a new yearly open. It's going to be huge for Bitcoin. Right now, at least for the near term, we're in December, so we'll discuss what's going on. The resistance, the near term main resistance is obviously the December open. Then your secondary resistance to get beat or to get through before Bitcoin could see any kind of a rally would be the yearly open. So primary resistance, secondary. Basically, I don't want to do anything with Bitcoin, whether I'm long or short, while it's trading in here, in this area. Because if it's above December's open, then it's more than likely coming back to the year open. So it would be a difficult, there's just too much range in here for me to identify a very good trade opportunity. As long as it's trading under the December open, I think you should have a bearish bias on Bitcoin. And that would just protect you from any dramatic drop that could come through this week, next week, because this week and next week is going to be very thin as far as liquidity is concerned. So you can see gigantic moves when there's very thin liquidity. Generally, those moves will be retraced, but still, you don't want to be, subject to a nasty drop because of thin liquidity. Then you would want to be short. I don't see a short entry here on Bitcoin this morning. The short entry would have been yesterday, and people inside of my community identified that. I don't know if anybody took it, but they definitely were on top of it. Now, you know how I use the session volume profile to help with day trades, to look for, who's in control of order flow on the day order flow and the week order flow, the weekly order flow. You can also use, because there's a lot of people asking me about the visible range. Why don't I just use that? It's a long-term indicator. It shows you where a lot of volume is. So you can use the visible range profile if you want. That's just this profile over here. The problem with it is it's super subjective, because this indicator is going to give you data on what candles are on the chart. So literally, if you just take these few candles off the chart, the data changes. Give it a minute, and it's not going to be a huge change, but it changes, right? So it's subjective. If you want to look at the visible range volume, then do it with objective price. It's simple. You can look at from the quarter open on, or the monthly open, or the weekly open, right? You can turn it into a session volume profile. It's just the session won't be for the day. It'll be for the entire month or week. So if right here's the December open, then we would just basically take all the bars or all the candles off of the chart and only display the candles for the month of December. And then you can get an objective look at the volume profile. I have no problem with that. Now on this indicator, the point of control is white. I usually set that to red, but this is just default, the default settings. Notice where the POC is for the entire month of December. The POC is literally at the December open. So that is resistance. That's where the majority volume has traded for the month of December. And there's no doubt. I mean, that's generally what we're looking for, right? We watch objective levels because we know they make people do things. That's all. That's the reason. That's how you can build a strategy around it. If people are short for the month of December and their entries at the open, if Bitcoin's trading above that, they're in the red. And the same can be said for longs. Objective December low is $83,800. So if anybody's long from there, we know their stop is under there. Not a lot of volume down there. And you can see here, I've got this area shaded out with the gray. That's just showing you where the value area low is for the month of December. Value area high for the month of December is up here. So it's just showing you that there's weakness, but quite a bit of volume in here. It's not going to give you a directional bias. It just won't. If price is rejecting from the POC and heading in one direction, then that's the direction of the trade you would be looking to take. If you're looking for shorts, you want a short swing high rejections. You're looking for long swing low rejections or swing failure patterns. You can call it whatever you want, but that's typically what you're doing when you're looking for trades. So here, Bitcoin is struggling to break under 4-hour support. For now, just very, very, very near-term price action. Looks extremely weak here. I mean, you're under the day open, under the week open, under the month open, under the year. I mean, you're just weak. All the averages are saying that it's weak, but there's no downside continuation, and that has to give you a little bit of pause. The entire month of December, why can't it make fresh month lows? Well, maybe it's being accumulated. Maybe nobody's trading it. There could be a few reasons why, but whenever that's happening, we tend to go into more of a range-bound trading strategy. Right now, Pingu is still trending under those lows. Filecoin is making fresh lows, so that really sucks. Because that would be a beautiful short side entry at the week open. For Filecoin, that's if it gets downside continuation. We don't know that it will, but it looks like it's trying to this morning. We're still a good 45 minutes away from the open. Good morning, Ed. Good morning, Jewelry Affairs. Good morning, Ed. Yeah, I don't expect a lot of people to be here. Most people are not trading this week. It's a very thin week. Very boring. We're watching TLT here. Pre-market, the TLT was up. I find it funny that now it's down. This morning, when I looked at the chart earlier, it was up in here. There's some crazy stuff going on. That's going to be from the news. I don't know. I'm assuming that's going to be the durable goods. So if we start trending under this, then obviously I'm closing my TLT long. It's as simple as that. It's had enough time down here to basically bounce if it's going to bounce. And since you're so close to the monthly close, let's close all these off. Let's clean the chart up a little bit. Since you're so close to the monthly close, I mean, if it's trending under the low, then we don't want to be holding longs. We're long basically at the low. So we were kind of anticipating a bounce here because of rate cuts. I understand that rate cuts affect the more near end of the curve. I get that, but over time it does fluctuate and work its way out towards the end of the yield curves. So getting long the 20-year might not be, it might take a longer time for it to play out, if it's going to play out. That's what the Fed wants to see. They want to see this thing going back in the upward direction. It would at least speak to some near-term. It would take away from the volatility, right? The nervousness of everybody. The bonds are breaking down while the Fed is cutting interest rates. It's typically not a good thing. What happened here? Wait a minute. Oh, here it is. Never mind. Okay, so here's the top leaders in the sector. The top leaders in the sector, the four biggest assets, your tech, your financials. Financials making fresh all-time highs yesterday. So for whatever reason, financials doing really good. Tech and communications are kind of the same, or they have a lot of the same companies in them, right? It's technology, communications, Google, things, Amazon, things like that. A lot of the same companies in all of at least these three, but Tesla's up at all-time highs, so XLY is breaking out. Tesla's a huge asset in the XLY. It's just, everything looks okay here. Here's your all-time highs on communications. You're just barely off. And then tech. Just range bound, right? This leg of price was your expansion. This is your choppiness or your range. And you're trading in November's range. It's very choppy. Very choppy. Let's go look at Tesla. Let's see if it's broke out yet. I know it's trying to. It looks like it's going to. Yeah, it's trying to. I have this blue line on the chart for one of the members in my community sold 515 calls. And obviously, when you sell calls, it limits your upside to the shares you own. But ultimately speaking, if Tesla breaks out and starts running high, owning Tesla at 515 might not end up being a bad idea. Just imagine if you were selling calls on gold, like all year, right? And you were getting filled at higher prices, losing the trade, but overall outperforming because of the shares you own going up. Well, you may see something similar to like that happen on Tesla. I just do price action. I'm analyzing what's taking place on the chart, but there is a chart pattern here, and the potential target on the rectangle breakout, I don't agree with chart patterns and all that, but they do sometimes have measured move targets like head and shoulders, rising wedges and stuff like that. But for the rectangle, you have a potential upside target of $800. Now, would I expect Tesla to get up to $800? No. But all I'm trying to say is if you do get a nice breakout and a nice extended run to the upside, you could see Tesla hit 650, 625. So therefore, owning Tesla at 515, not a bad idea if the breakout continues. Where you run into problems is if you just get filled on the shares and then you go into a bear market. I'm not expecting a bear market. Other people are. So you have to just decide whether or not you think we're going to see a bear market or not. I don't think we're going to see one. Not anytime soon. Not anytime in the next half of a year anyway. But I could be wrong. I didn't expect the bear market we got in 2025. The bear market only lasted until April, and then we made fresh all-time highs. So it wasn't a very long-lasting bear market, but we did hit bear market territory. Under 20% on the S&P. I did not expect that to happen. So anything can happen. You have to plan for anything. But yeah, I mean, Tesla looks like it's trying to break out. You traded up into fresh all-time highs right there, wasn't it? No, it's over here. Okay. Oh, yeah, you did. You did. You traded up into fresh all-time highs and closed. You put in a bearish, almost a bearish engulfing here, which is typically a reversal, or people look for it to be a reversal. Doesn't always play out. Here was a bearish engulfing daily that did play out for a downside move. This wasn't an engulfing. It was a trending candle. It only took out one side of the previous trend. But your lows are higher. Higher low, higher low, higher low. You're making higher lows, so you're wedging up. It looks like it's trying to break out. I don't know that it will break out, but it does. If I was trading Tesla like intraday, I would be buying daily swing lows, or trying to, looking for the upside expansion to take profits. Long-term owning Tesla, I just expect it to go up. I don't have a cap on what Tesla could be in the future because of ride sharing and the robot and all this, right? They have a huge upside potential. But it does look like it is trying to break out of it's kind of the bear market of 2025, right? That's where you put in that downside move. Consolidated, traded up, consolidated again, traded up, consolidated again. So this, to me, like the risk on Tesla would be to the upside. So I would be very hesitant about holding heavy shorts. Scalping shorts is fine. And you've got this Friday is when that trade will expire. So as long as you're not above 515 at expiration, that trade could work out profitably. Depending on when you put it on, it could already be profitable. because each day that goes by, there is a slight amount of premium that gets extracted out of the contracts you sold. So the closer and closer you get to expiration, the less and less premium is still on those. Like right now, there's probably like $1, $2 of premium left. You could possibly close that trade out with a profit already, if you want, or just take the fill on the shares and ride the breakout. It's a covered call. It's not naked, so their risk is mitigated. Yeah, the 515 on that expiration, there's literally pre-market only $1.09 left on the premium. We're not seeing any significant bounces here on Pingu or Bitcoin. Market isn't open yet, but let's see what we're doing here. The 4-hour support's here. 30-minute support's a little bit higher. I thought yesterday day open retest would be a viable opportunity. It obviously was not. So that kind of stinks. Now that you're trending lower on the week, the obvious trade would be looking to short day high. But your day high is way up here. So I would not be expecting a short if you get back up there. Pingu is still trending lower. So it looks like Pingu's wanting to break down here. That really bites if that happens, because I hit the wrong button. Hit the flash close on the Fartcoin short. We'll see what happens with it. This is also a fresh week low. There's your week open. As long as you're under that or rejecting that, you can be looking for shorts, because that's what your volume is saying. Also, deltas are looking weak here. That's Delta's looking weak on Bonk. Deltas are still positive on Pingu, but depending on if this candle breaks down or not, will more than likely decide what's going to happen here. So you can see why, if this fails to go lower than that, then I would be more than okay with holding a long there. Based on deltas, let's see if our intraday POC is in the same place. Intraday POC is a little higher, but still at the low range. I mean, I could justify long entries here, as long as it's not breaking down and continuing lower. So like right here's the only place that I would be wanting to buy it. So we'll keep it on watch. It doesn't look good here, but that can change. We've seen it change so many times. I don't have a bullish bias though, so it makes me not really want to buy it at all. I don't have a super negative bias on Bitcoin. Like long term, I think Bitcoin's a buy. I think people should own Bitcoin. Honestly. Like honestly, I think you should own a little bit of Bitcoin. It's too great of a risk for you not to. You lose a little bit of money if it turns out Bitcoin doesn't do what it was built to do, but it's already doing. what it was built to do. It's already been voted on. Bitcoin would be long gone or long dead or trading for pennies on the dollar if no one thought Bitcoin was going to be anything. Look at Pingu. Do you think trading at what, 0.0008, like less than a penny? Do you think people think Pingu's going to be something long term at less than a penny? No. Bitcoin's 88,000 a coin. Right? Like, there's a difference. People have voted and they believe Bitcoin's going to be what they think it's going to be. And if it does, the risk is too great if you don't own any. I have no problem with shorting futures if you own Bitcoin. That is the strategy you should do, because you can buy more Bitcoin that way without using your hard-earned money. Use trading funds, transition into Bitcoin longs to build a long-term, larger position. For some of, like, especially even me, back when I was an employee for somebody else, like buying a whole Bitcoin at $80,000 was out of reach. Completely out of reach for most Americans, for most working class citizens. But if you can trade, you can definitely build your way up to owning one with trading profits. But yeah, long term, I like Bitcoin. The adoption curve and all that stuff, where we are in the adoption curve for Bitcoin, like, honestly, I think it's going much, much higher. $125,000 will not be the top for Bitcoin, more than likely. So Pingu finding a little bit of really near-term support. Still got a little bit of time left before the bell, and obviously the most volume is going to play out during the first 30 minutes of the market. So I will take entry here again and set stop at low day. I don't have a bullish bias, but it's the only thing we got to work with this morning. I would much rather be sitting in the Fartcoin short. However, that could be stopped out later too. It just doesn't feel like it would be. Since it is Tuesday, we could be setting the weekly low. If you continue trending lower, then you're obviously not setting the weekly low today. So yeah, let's get you see if these two prices are the same. Got 879, 8798 here. A limit by 8798. 8798. Or just 879. Doesn't matter, it's so close. Clearly the structure looks negative. But if that delta can hold above the positive territory and it could trade away from this, I would be more than fine holding along there. More than okay with it. XMR is a little bit more difficult to trade, so if you're looking to trade XMR, just please be very careful. This is not traded on normal exchanges. The futures contracts are, but the spot price isn't. And futures track spot prices. So it almost it feels like it would matter more what happens in the spot market, and there's no way to know, but either way, it's a very volatile and difficult to trade asset. And generally speaking, the short trades have not been working out long term on XMR because for the last 4 months, you've been trending up. So clearly the best buy in hindsight was to be long XMR since October, which is where Bitcoin rolled over, where the hash rate topped out. October. Pingu just dumped. Gonna be so mad, man. There isn't a short to take here. Oh, and another asset we were watching was River USD. Obviously, this thing was a jerk off all day yesterday. It actually did end up working out, but not for me. I got stopped out of it. But that would have been the most premium entry to take. That's where I was looking to get short. It just failed to get up there so many times. I thought it was going to roll over. So I took a short here. And then obviously got stopped out right there. And I didn't jump back on it because I went to bed at 9. So I went to bed an hour, 2 hours after the day opened. And you can see here for the first 8 hours of the day open, it traded choppy and sideways. So I got stopped out of it, and then it didn't break down till the London session this morning. But it did break down, and it did hit targets. This was our target right there. So hopefully somebody made money. I didn't on this one. But if you would have been able to hold that position, it's a 19% move. That's a huge money trade with 20x leverage. I don't care how big of a position you put on. It's a nice trade. It ended up working, but not for me. I still think it goes lower. I don't love it. Like, I don't, it's not weak. It's been very strong for the last several days. It bottomed out here last Tuesday. And every day since, you've made higher lows, higher highs. Obviously, the trend for a few days have been extremely strong. That's last week's open. That's typically where we look at for resistance to hold, at least on the first attempt. Now, if this holds as support here, right, then we would have a bullish bias because of where the monthly VWAP is, because of where the daily 21 exponential is. So you got to close back under the daily 21, the yellow line. You got to close back under that before you can get bearish. But we were looking for the bearish trade yesterday based on volume and deltas and the week open retest. It's an objective level where we look for resistance to show up. The first retest, it can break out back to the upside if it holds support. That's going to be the big question here on this moving forward. Does this area offer up support? If it does, then more than likely you're going higher. That's why we were targeting this area for our take profits. Short, take profits, and then see what happens. If it breaks down, then you'll make more money as it breaks down. If not, you'll get stopped out, but you still made money either way. I don't know that it's going to go up from here, and it doesn't look great that it's going to go up. Deltas are still heavily negative here. I love the point of control for the breakdown. Just love it. It looks really good for downside continuation, but this is support, objectively speaking. It's the week open. So it could hold as support. But I do like, if you're holding shorts on this from yesterday, because I did post it on Twitter as well, just keep holding them. Take profits, though. Make sure you take profits here. And just move your stop to break even. So that way, if it does spike back up into your face, you've already gotten paid. But other than that, it doesn't look good for support. You do have volume building in down here, so it could hold support. I would not take a fresh short here. Absolutely not. I don't love the idea of getting long here either, but I definitely would not be looking for a short here. So this one, as far as I'm concerned, done with it. There was a couple big movers this morning. From what I looked at, there just wasn't. Rave USDT is now the leader, up 48%. There's no real trade to make on it. It's only got a 64 on 4-hour RSI, so it's not overblown yet. Let's pull it up. Excuse me. So you're not overblown here yet. It's a new asset. Lots of volume traded, 10 million tokens traded. Funding rates are okay. There's just nothing here. I wouldn't be shorting it just to short it there. Yeah, I mean, it could definitely trade back up to there, right? That's going to be the week open, so that's where I would expect or anticipate the first resistance point. And maybe if it gets up here and fails, then maybe we can look for a short. Well, we can't look for a short. Deltas are extremely positive. Session volume is at the high, but doesn't matter if you're trending above it, right? It only matters if it's in this area and price is leaving it. So this actually looks like it can continue to go higher. There's really no setup here. We can set alerts. What else do we got? Oh, Voy. V-O-O. Oh, there's only 15,000 tokens traded. I'm not trading that. Get destroyed. That Pingu's breaking down, so obviously I got stopped. Got filled and stopped instantly. Got 15 minutes to the bell, so don't make no big moves just yet. That's actually a pretty good reaction from Bitcoin, but as far as a bounce goes, just very tight range. It's not even a half, like it's just over 0.5%. Bitcoin doesn't really move anymore. Like you're down 1%. Ethereum at least is down 2.3%, so Ethereum's had a bigger move. Farcoin's down 5%. That's why we love trading Farcoin. It just moves so much. It was a beautiful short, man. I'm so disgusted in myself. It is what it is. Can't catch them all. Fat fingers will happen. But yeah, it looks like they want to go lower here. This is trending, so it's going to make it a very difficult long, regardless of what's being said with volume. Super weak. And it's trending. The XMR is retesting the month open. I think XMR could be a play if it fails here. You're getting a bounce, so something similar to like what played out here. You set this low and then bounced. We don't have a large level like the weekly open to look at, but same theory, same principle. If it's just a dead cat bounce, we would expect it to smoke the very near-term shorts. If it stays trading under 450, I think you can be short. Its structure is clearly up. This supports a potential down move, and session volume profile supports a potential down move. Well, actually, it doesn't any longer. It has migrated lower. Oh, no, it didn't. It's been down here for a minute. Yeah, this looks like volume. Looks like support's trying to hold. But here's the thing. If it rejects here and breaks down, all these stops will propel it lower. But right now, our session volume profile looks like a lowercase b, right? Typically, if you're going to see trend continuation, you would expect it to look something like this by the end of the day. Now, I'm not saying it's going all the way down here. I'm just saying that if it liquidates up in here and rolls over, all these stops can help force a larger move down. So let's say the short does work here. Value area high. You really only need a fresh day low to make a very, very nice profit target. That's a 3% move. With the right position sizing and right leverage, that could be a decent trade. Clearly, it's got to reject here. So what do I do if it like starts closing 30 minutes above? Well, 1 close above is okay. 2 and a higher close, you're trending. You're continuing up. Well, you're not trending. You're retracing deeper into the range that was already set. So this is already your daily expansion. It's already happened. We would be looking for a continuation of that daily range expansion. It's already a large move though. So there might not be anything here. You could literally chop here all day or just reverse and chop back up into the range. But at least it is providing a potential setup. It's more than I can say for these. They've already took off. Yeah, Zcash, we were expecting this to break down. It clearly did not. It's just very, very difficult to trade. There's no objective level here for me to look for positions, whether long or short, on Zcash. To POC. Sold everything when Bitcoin was at 110, not looking at this for another 2 years. That's fair. I know other people that got out of Bitcoin because they want to buy it lower. I mean, that's a fair argument to make. Generally, though, I mean, I'm not saying that that will happen for you, right? I'm just saying, generally speaking, when people get out looking to get back in at lower prices, they generally don't get in at their lower price. The only way you can make sure that you do get in 2 years from now, I don't know why 2 years. Bitcoin hasn't experienced a 2-year bear market. I mean, the lows were already set with it before the 2-year span was up. But just if there's a specific price where you want to get in, set a limit to get in there. That way, no matter what, you get in. If Bitcoin, like a lot of people think Bitcoin's overvalued, if it ends up being, which I'm not saying it will, but if it does, $80,000 would be cheap Bitcoin. It was designed to go up. Like, that's what it was built to do with a limited supply. Once mass adoption takes hold of Bitcoin and it actually becomes what it was designed to become, like a lot of people assume that quantum computing is the largest risk for Bitcoin, and I agree with them in the technical aspect, right? Clearly, quantum computing will break any encryption You would have to have quantum levels of encryption. And I'm sure they're working on that. But I also think that a huge risk to what Bitcoin becomes is, how do people, like, yeah, sure, they voted on it already and they think it's valuable. It's a store of value at the very minimum. Just being a store of value won't be enough. People will need to use Bitcoin. They'll have to transact with it. They'll have to buy stuff with it. Some like heavy Bitcoiners also think that people will have to also run nodes of their own. I think that's getting a little bit too technical for what average people will do, but who knows? I'm sure like they could, if running a node is as simple as just, getting a piece of hardware, plugging it in and turning it on, then obviously people could do that as well. But if when mass adoption happens, if people use it for what it was designed to be used for, the value proposition is insane. Like, it was literally designed to go up to the point to, like, every coin in the future could potentially be worth 24 million. That won't happen because of all the lost tokens and this and that, but just speaking on it, like, mathematically, the way it was designed, the way it was built, like, Bitcoin truly is probably one of the most perfect monies ever invented. So yeah, I mean, but it's a dream that Bitcoin does become what it was designed to become. But there's always that if it does, then even owning Bitcoin at $125,000 is a win. And another thing that's a hard sell for me. Like, I used to be just a trader when it came to Bitcoin. I used to, like, when I first started this channel, I really didn't care about Bitcoin. I wasn't a Bitcoin maximalist. I'm still not a Bitcoin maximalist. I'm still just a trader. But the volatility of Bitcoin has died down so much because of mass adoption, right? Used to, Bitcoin would move 5% per day. So it offered up amazing intraday volatilities, amazing intraday opportunities. Not so much anymore. And it will get worse over time. The ranges will get tighter and tighter, smaller and smaller, because it will act the way it's supposed to. It will be doing what it was designed to do. All the FUD that has come out, all of it, since Bitcoin's inception, I mean, you name it, right? Four-year cycle models, or governments are going to control Bitcoin, or Bitcoin's fundamentally flawed based on a code level, blah, blah, whatever. Like, all of the FUD, all of it, right? Just think about all of the FUD. And then just look at the chart. All of the FUD. And look at the chart. Like, it makes sense. Everybody, like, whoever's been trying to kill or destroy Bitcoin have failed huge. That says a lot for me for long-term growth. As we're going into 2026, Bitcoin's still a very young asset class. Does this look like a bubble? No. Bubbles die, right? Bubbles go up, they get insanely volatile, they explode in value, then they die. They die. Well, Bitcoin's done that through all of its boom bust phases, except it never died. No matter where you bought Bitcoin, even if you're listening to my voice right now and you bought Bitcoin at $125,000, I would never tell you to sit in a loss. First and foremost, you should have already got out. If you're just looking at it for a trading or an investment perspective, you should not sit in heavy losses. Your losses should never be more than your winners. But if you're setting in Bitcoin at that price, everybody that's bought an all-time high on Bitcoin never was in the red for more than 4 years. Every single time Bitcoin has made a fresh new high, and it's happened quicker. And all the lows are higher. Like the bear market lows, 88%, then 84, then 77. So this bear market it'll be fun to watch. Where does it bottom out? Right? Does it bottom out at 50K? Does it bottom out at 30? Nobody knows. But if Bitcoin is going to do what it has been doing, then we know that it won't go lower than 6%. That puts you down around 28K. So that looks like a good place to be a buyer. I don't think it's going that low, but we'll see what it does. All right, let's go look at what we're doing here pre-market, or now that we've got the bell. See if Bitcoin's going to zero or not. I think everybody should own a little bit of Bitcoin. Good morning, champ. UC Pippin, weekly RSI 94. No, I did not. We'll look at it though. But Pingu's still breaking down. Farcoin's still breaking down. Ethereum's still breaking down. Might be on the lows. I haven't did the music. Oh, it's playing. Just can't hear it. All right, Pippin, let me pull that up. So clearly this is trending now, right? Fresh lows. Fresh lows. So now it's trending to the downside. If it's just a liquidation, it should reverse soon. If it keeps making fresh lows, get out of it. Get out of it. Japanese yen is also up today. I don't know if that's going to help the market stay weak. Oh, risk markets just spiked. VIX is making fresh yearly lows, so that should be bullish for risk markets. All right. So yeah, if TLT continues to push lower, get out. Don't take a big loss on it. All right, Pippin. I did not see it. Did I spell that right? Let me look at your comment again. Pippin. Okay. Pippin. There it is. Now this one didn't. It's not on my radar. Why isn't it on my radar? Okay, it is. It's up 24%. Super volatile. Let me pull it up and make sure we're not seeing some crazy. Funding is paying longs, but it's not big yet. 0.018 getting paid to the longs, and that's every hour. Every hour. So that will by itself give it bullish power. See this? Funding rate is paying longs. It's a little, we typically want to see another zero. We want to see 0, 0, 0. Then whole number in the ones place. You got a whole number in the tens place. And it's paying out every hour. Because the 4-hour candle closes at 11. So there's still an hour and 30 minutes left on this 4-hour candle. But right here, the funding rate countdown says there's only 26 minutes. So that means it's paying out every hour or every 2 hours. I would say it's probably every hour. That will give it bullish potential, because people like me would be like, well, hell, if it's paying that much in funding fees, then I'll just look for a support zone and buy it and get paid on the funding. There was one yesterday that we were watching. The funding rate was terrible on. Right here. Beat USD. I did not see the funding when I took this sell. So I'm trying to teach you guys, right? Look at this right here. You've got heavy funding in the in the tens place, 0.6. So what does that mean? So when this rolled over, oh, sorry. Shit. When this rolled over, this is what I'm looking at here. So with my position size, I had less than, it was like $100 and 20x leverage. When that 7 went to 0, they immediately took money out of my account. $18. $18. Because it's paying the longs. That's how funding rates work. So when you have a funding rate that's this high and every hour, you do not, I repeat, want to short that. Because they bought it here. They were watching that swing low and said, you know, with that high of a funding, I can get in here, and then the price bounces. As long as it's above my entry, I'll make $20 every hour. Though it doesn't even need to go up. It could just trade sideways all day. And I'll make a lot of money every hour. Free money is what it is. It's literally free money. But be careful whenever you're trading these big movers. That was with a $134 position. You don't see the realized P&L here, -$1. That's on the entry. I got filled on the entry and I paid out $1. It went up to $19 when that rolled over to 0. Funding fees, huge. So whenever that's happening, it just literally makes these assets, it brings in so much more bullishness, so much more demand. Now you don't have that here. It's not as heavy, but it's still paying the buyers. Would I buy this? No. No, I wouldn't. But I would buy down here if this funding rate gets bigger and continues to pay the longs. And I wouldn't mind being in long right here. So just be careful. You're nowhere near overbought yet. That's not something that I would want to short. You are into 4-hour resistance. And then I think you said it's maybe higher resistance. Well, here's your week open. Month open way down here. So clearly we were looking at this thing at 20 cents because I had lines up down there, and it's trading 100% higher than that. So damn, I'll just say that right off the bat. I wish I would have bought this at the December open. In hindsight, very, very choppy, dude. Very crazy. That's a 47% move in one day. Super volatile. Like, volatile ain't even the word I would use for this. Very, very small positions if you're trading it. Now, let me see what you said. Weekly RSI at 94. Okay. So in that scenario, you're right. It's probably going to pull back. Because this happened to ZEC as well. If you remember, ZEC was printing a 95, 94, 95 on the weekly RSI. It's unsustainable. The growth is unsustainable. So most likely, it's going to pull back. The hard question is where. So like you do have a 4-hour res here. That's the highest closing 4-hour candle from where price is trading now. But you also have one just above it and then one just above that. So I don't really love that. Very choppy structure here. Just imagine shorting there. In 4 hours, you doubled your account like 5 times. Insane. Very volatile. it's going to be very difficult to trade this. You're above everything that matters here. Oh. Week high is all the way up there. That's also the all-time high. So you're in the middle of a pretty big range here. Nothing on the monthly. You're above daily res. So I would rather look at daily res than weekly res. I mean, than the 4-hour res. But that's not really going to be helpful. Okay, so basically the only thing I could say if I was looking at this is, remember, the funding rate is paying the longs. So there's that every hour. It's not a huge funding rate, but it's still big. Ooh, I like the volume profile. I do dig that. I mean, not volume profile, sorry. Volume delta. Even though you've got a significant bullish rally here, volume is not. I mean, it's definitely bullish, but look at the difference between these big moves here with the volume. Like, much larger bullish volumes. But it's still positive, though. And your POC is down here. So people bought down here. You're trading well above yesterday's high. So it's a difficult trade. So there's yesterday's high. And you spent hours chopping there. I mean, we could try it. I just don't love it. It's going to... So there is a significant buildup of volume here. This is most likely going to migrate higher here in just a little bit. Right? Just a little bit. This... But that could mean prices are going up. There's nothing else here to liquidate but the current high of day. But the current high of day has been liquidated 1, 2, 3, 4 times. How many more times is it going to be liquidated? That's impossible to know. All right, let's get real freaky with it. Let's see if we have an obvious pattern or... Okay, so... Try it. That smooths it out. Okay. So, like, I can't even begin to want to short this. Because look what it's doing, right? You can see where it's being manipulated, or at least, at the very least, where those big buyers are stepping up. Now, is it an algo? Maybe, maybe not. So this is, when this happens, you got to be very nervous because it's not trending under. It's not breaking down. It's consolidating under. Consolidating under. Very careful when that happens. So if you want to scalp this, you can, right? You can sell here. Why? Yesterday's high. Where do you take profits? Here. That's barely a % move. even if it breaks down significantly, it's going to be hard to catch it because it's probably going to move super fast. I agree with you. This is definitely something that you want to be keeping an eye on because it is pretty damn overbought, right? It's definitely going to pull back soon. Is it going to be this week though? We don't know. So we can watch old liquidation points, put risk on, and then target where the algos are clearly buying. We know the algos are buying here. We know it because the price refuses to go under. It doesn't break down. Now, if it breaks down, it doesn't always mean the algos are done. They just regroup and catch it somewhere else. But at least at the very minimum, we can see on a 5-second basis where the big buyers are stepping up. And that's always important. As traders, we can mitigate our risk this way. So we'll give it a second here, see if it can get up above 43,733. It's going to be a wild. Let me see what size position. Let's see what it moves with just a small position. How much it moves with $100. Finger literally. Let me set stop. To be 10%. Yeah. So here, this is what you're looking at. That's a $100 position with 20x leverage with a 10% stop. It's right on it. Like it should already be out. Did I accidentally get in with a long? I did. It says it right there. But anyways, you get what I'm saying, right? See how tight the stop is? So you would have to essentially put on a smaller position and double up the stop. So we can sell 3,300 of them. Okay, we're gonna have to chase it a little bit. See, we don't want to be a buyer right here. I mean, a seller right here. I'm just trying to give you an example of how dangerous this thing is. Okay, so now we're short $72. If we can set a take stop loss of 20%, that'd be $14 lost on the trade. What's 30%? $21 lost on the trade. 40%. Oop. 28. All right, so let's go back to 30 and see how wide the stop is. Okay, so that gives us a little bit of room. We don't really have any money on this. So if it dropped 40%, how much would we make? Oh, sorry. If the asset dropped 40%, my bad. Give me 1 second. $26. Okay, so take profit at 0.26. So is that a good risk to reward? 800%. Yeah, it is. It is. Absolutely. So what are our chances? Very slim. Slim to none. If it makes a fresh day high, we're out. If it dumps, 40% will make $500. It's a lottery ticket. But yeah, it's very volatile. If you're really good at managing risk and, you know, you have your emotions about you, like you're not getting too emotional with this, there are clear and obvious places to put risk on and where to take risk off. So you could scalp this. Absolutely. It's moving enough to scalp. And what's good about scalping the short side when the asset is going up like this, because we know eventually it's going to pull back. We know it is. It's not going to go to 1 million on the RSI. The problem is catching that pullback or catching that big gigantic move lower so you can scalp your way into profitability. Look to put risk on at the highs, look to take risk off at the trailing average. There's a 5-second chart with a 1400 simple. Is it a good strategy? Not really. You know what I mean? It wasn't effective down here. It's only been effective since 6:30 this morning. So people are going to be buying and looking to scale out on the upside. You would be looking to sell, scale out on the downside. If you can get in, take profits on the move lower, leave the position open, because if you do get that larger drop, which it's not a move I would anticipate to happen, but it can happen. I mean, it did here. I wouldn't expect that same exact thing to happen. A more realistic profit target on this would be way up here. Like, that would be more realistic. I like how they changed this. I do dig that. All right, let's go see what Bonk and Pingu are doing while we're sitting in this. Bonk's trending lower. So is Pingu. Let me guess. Yep. That makes me so mad, man. I had the perfect size position on that. I would be taking profits on that move right now. Damn it, dude. Damn it, damn it, damn it, damn it, damn it. Is what it is. Bitcoin breaking down. So we got weakness ensuing. Risk markets at fresh all-time highs? No. At above the previous month high. So back to November's high. We're back above it. We don't have a bearish bias on this above November's high. Now it is getting into what could be resistance, but I mean, that's the weekly expected range high. You've got daily res that you could also look at potentially. If you're looking for the scalp lower on MES or just ES or SPX or SPY, VIX is making a fresh 2025 low right now. So I would not have a bearish bias with that going on. Gold broke out. Crazy run gold's having, man. Crazy run. Okay, so that's rolling over. Are we rolling over here? We are. Super bullish with the structure on Aussie yen. I do not love a short here, but it's up more than anything. Oh, no, it isn't. New Zealand is up more and Aussie is up more. So you're seeing Aussie strength. Dollar down, yen up. So US dollar yen is working out today, but could you have looked at shorts at 4 hours supply? You could have, but you would have just been picking a random top after being stopped out from last week. You know what I mean? This thing is just continuously stopping folks out. There are better assets to look for dollar weakness than USD JPY. But if you're looking for yen strength specifically, then I think this is the best asset to short. Me, myself, and I. It's just my opinion because it makes sense. USD weakness, you got that, and then it will also be weak if the yen firms up. The problem with the yen firming up is that it is super weak and down on the lows. Here's the yen futures with live data. Live data. So this is a daily chart. Lots of freaking volume coming in here for the last couple weeks. Could be a contract change, rolling. People rolling their short positions over. I don't know. Huge big move. This is a fresh year low on the futures. If we look at it like the yen futures on TradingView, it's not a fresh low. So confusing. It's not even a fresh yearly low. Like here is the yearly low. January the 10th, that's your yearly low. You didn't even make a fresh yearly low on this yet. So I don't know how TradingView does this. Like when they get the contract rollover, I don't know what they're doing. Because this chart looks completely different than real-time data yen futures. Because real-time data yen futures, you do have fresh yearly lows. Because this is a 1 year, 1 day chart. But right here is January. Right there would be your yearly low. Like you're well under the yearly low here. It's just bouncing because it made fresh lows. What's likely going to happen? Well, it's not likely, right? There's no greater odds that it's going to go lower. But since it's been weak, since it bounced, chopped around, and then dropped, they'll probably sell the spike. I mean, that's what I would do. I would hate shorting all the way down here, though, because right there is your year low. You're literally shorting the bottom of the range. So it's not a great short position, but... if the yen continues to firm up today, then I would expect the VIX to bounce. If the yen's up and the VIX isn't, then don't read too much into the yen bounce, okay? When you should read into it is like when the VIX is moving up in relation with the yen. And then, of course, you would want to see risk markets heading lower. But VIX has made a fresh year low today. So yeah, if you're going to look to short for USD weakness, USD Swissy isn't a great short setup. because it literally just bounced off those lows. Dollar's bouncing off the October open again. We bounced off the October open Tuesday of last week on the DXY. So that's currently what we got going on here. You liquidated Tuesday's low, so that's a fresh weekly low. There's weekly supply. Near-term gap. That's a bullish engulf. On the lows, it makes it a difficult short to go after. Weekly opens up here. If it could reject here, I could short it. Or look for longs on euro dollar. Euro dollar still extremely structured bullish. So it's the end of the month. You didn't even make a fresh month high on FXCM. You might have on other exchanges. I'm looking at this exchange because they give me volume data. I really don't need volume data to see that this is trending up. December's open is here. You're clearly trending up on the month. But I would hold a bullish bias on euro for the entire. I could be bullish even down as low as 1.17 on euro. Weekly support on Bitcoin. Is this a big level for Bitcoin? Huge level. So you've not been able to close a weekly candle under 86,700. Well, 86.8, we'll call it. You've not been able to close a weekly under that price. And you've not been able to close a weekly above this price. 90. So you've been stuck in this range 6 weeks now. Very boring price action. I don't know that I would want to buy this. I think I would rather buy closer down here. What is this? What do we got going on there? Oh, that's that December value area low. Okay, so I could be a buyer in that area on Bitcoin. Even though the structure is weak, even though it's bearish, typically speaking, like if we were trading it, we would want to be shorting rips. But if we're looking to accumulate it or buy it, we want to see support come in here. We want to see it make a higher weekly low. If it makes a lower weekly low, that's going to be not great. So let's go look at some other stuff real quick and see what's going on here. Daily exchange volumes, very low. Makes sense. It's Christmas. Hash rates topped out in October. It's lost the internet. Came back. We still haven't been stopped out of Pippin, but anyway, let's go look. Bitcoin ETF flows. So out yesterday, but it's not heavy outflows. We saw heavy outflows December 16 and December 15. Anything over 250, I kind of view as like heavier. This week, starting off, we'll see what today ends up being, but outflows nonetheless. Long-term hodler supply, what are we doing on that? Still are not bouncing, but still not moving lower either. That smells more of accumulation than dumpage. Let's look at it again. But longer term. So we see heavy outflows and usually there's a big spike. That's not always true. We saw heavy outflows here and it took a long time for them to start buying it back up. So from December all the way to April it took for that sideways consolidation. After the drop, right? It dropped again, and then it just slowly grinded sideways for months. December 25th, you didn't start to spike back to the upside until April. A very, very slow accumulation here. Could we see another drop? Yeah, but I'm not expecting another big dump like this. Could happen though. I'm just not expecting it. Very choppy, very sideways. This kind of price action aggravates people. It should not be this weak, especially with rate cuts and all that. But it is. So, nonetheless, it's what we got. Okay, so this time they were unable to accumulate. That's a nice, what is that? So that's the week high. Week open, week high. Okay. So this is the first time we've been able to get under that moving average since 6:30. It doesn't mean it's going to dump, but at least something has changed on the near term. See if the accumulators show back up at 40 cents. It's got a random profit target sitting out there. Just in case it dumps, because it can. We know it can. The last time it dumped, it did it in 1 hour. Well, 2 hours. There's a 46% move in 2 hours. First fresh hour low you've made since 2 o'clock. So it's not great news, but it's better. Got a long way to go to take that low out. So in my opinion, people still could be bullish all the way down to there. I wouldn't be. Not with this level of overboughtness. Like, it's got to roll over soon. And we're seeing that happen right now. Well, we are short. Our short didn't get stopped out. It's just such a small position. It's really not doing anything. But it could. We can add to the position also. We can add to the position as high as here. So we can set limit cells at 43448 to double up the position size. Because at least now we're seeing a little bit more, you know, that volatile collapse. It doesn't mean it's going to continue, of course, but oh, let's do that. Because it can get bought up. It's like the first real significant pullback you've seen all day. Generally, buyers will jump on that, especially if they think it's going up, if it's being manipulated or whatever, right? Let's see where the 21 is real quick. Okay, makes sense. Did we blast through it on the 5 minute? We sure did. Damn it. $33.10. 38 would be close. We can set that entry down here around that previous 4-hour swing low. Okay. Basically what I've done is I've added to the position with a limit order here. Just because now we've seen about what the risk would be on a pretty large move. It's not a dynamic, like a ginormous move, of course, but still, that lets me know I'm severely underpositioned. Severely underpositioned. So we would want to see resistance hold in here, right? This is where I've put the add. So I can add if it rejects here. And that's what we would want to see. The average start to slope down, and we would want to see rejection come in at a lower high. If it doesn't, we'll get stopped out. We'll be wrong. At least we do have on a little bit of risk if it does get downside continuation. Severely underpositioned for it. To be honest with you, anytime you get a multi-percentage move, you should be able to make some money on that. Give me 1 second, I'll be right back. I'm coming back, guys. Just give me a second. It's an important phone call. All right, I'm back. Sorry about that. It was that call was not expected, but still needed to take it. All right, so yeah, it's chopping here. Very normal price action. As now that you've got the move, your emotional sellers, those of the people that have been trying to short it all morning, they're now mad because they think they've missed this trade. So what you're seeing now is all those chasers come into the market. We don't want to be with them. They're going to get chopped up a little bit. Most likely, the way that I'm looking at it is if the buyers were defending this average, or if the algos were trying to, if it starts to trend with big bullish candles, starts ripping back to the upside above this, then I don't want to be in the trade any longer, because most likely it's going to stop out the high day. And generally, when you get these violent rips or breaks to the downside, especially on a very bullish asset, you will see a lot of chop. Like, it takes time. Generally, we don't see big breakdowns occur that often within seconds. Every now and then, we've seen them do that, right? Just having 30% flash dump. Those are like rug pull moments. Judging by this chart, seeing how it's already dropped 40, almost 50% before, and then regained structure, I doubt this was a rug. Otherwise, you wouldn't be still consolidating this gigantic range. But it is still, the matter is still there. It's still massively overbought. And I'm very okay with holding the short on it because of that. So thank you for bringing this setup up. Especially if this setup ends up paying us. I would like to get filled back up here though. So I'm not hating a pullback up to here. I would actually like it. So I can get in with the regular size position. I don't want to chase it down here because I don't want to bring my cost basis too low. Where my cost average is right now is perfect. It's just way undersized. And don't take that as a negative. When I say way undersized, please, that is not a negative. It's just, I have a very, I'm very apt to do that because I've blown many accounts when I first started trading. I know how easy it is to get in with too big of a position size and then get a 2% pop. And then there goes all your money. So it's always better to go in small because, like I said, you can always add, especially if you think there's going to be more downside. When you have an asset that is so top heavy like this, could another short squeeze continue? Obviously, the answer to that is yes. We don't want to be involved if the short squeeze is continuing. This doesn't look so much as a short squeeze than a short covering rally. Like whoever got out here or caused the massive aggressive move to the downside, clearly they bumped them back in here and then again here. So they're just taking profits. Eventually, when all the demand has been exhausted, it'll roll over hard and probably trend lower for a couple of days. But I mean, the daily structure looks insane. Definitely a very volatile asset. It is a very difficult trade. I wouldn't be trading it if you're not good at managing risk, because you're likely to get blowed up. If you can manage risk good, then do it. Because it is, I mean, it's not so much overbought on the daily or the 4 hour, which is where we prefer. I much prefer the 4 hour being massively overbought, because you're getting to the point to where you're just days away from the pullback. When you're looking at the weekly, you could still be weeks away from the pullback. You know what I mean? So if you continue to watch Pippin and you are looking for a deeper correction, like maybe a fresh higher weekly low, then watch the weekly open moving forward for the rest of this week. If price fails to trade back above that, then that would be a decent spot to put on a small position, because that drop is a significant drop. We've already looked at it. I mean, you're looking at a 30%, 35% move. That would be a huge dump. That will pay out big with leverage. With a very small position. You don't need to have $20,000 short Pippin right now. I don't know that it's going to roll over. That's what I'm trying to say. Like, yeah, and the 4 hour, we could still be days away because of the 4 hour structure. This is a new bullish break here. You're just consolidating these gains right here, right now. So this isn't done by any stretch of the imagination. Like, because the weekly's oversold, yeah, or overbought, yeah. We're getting closer to a top, but still, like, there's plenty of volatility still on the small time frames. Daily, you're not even overbought yet. And I do not like it trading above the high day close. This is your high day close. I do not like price trading above that, because it's telling me that there is demand at these prices for this asset. We want that demand to be exhausted. We want the buyers to be done. The reason the buyers are not done, most likely, is the funding rate. Unless there's news. If there's a legitimate bullish catalyst, then clearly we could be early looking for a short. Let's see. It looks like the last news that we got on this was in December 1. The article's not popping up for whatever reason. Let's pull it up here. Let's see what we got here. Despite the bearish trend that has dominated the crypto market, the meme coin Pippin, oh, it's a meme coin, yay, has stood out flying green while others stalled. Over the weekend, the meme coin emerged as one of the top gainers, rising by more than 50% and doubling its value in only a few days. Interestingly, one crypto analyst had previously called out the Pippin rally, predicting that the price would rise. But even with the major rally so far, the analyst's total prediction is yet to play out completely. Probably because they got some random crazy price target. Wait, this is old. Yeah, we're way above that. That isn't a crazy price target. We're way above that. We're at 40. Yeah. The analyst Eduardo, I don't know how to say that. The first breakout that began all of this for the Pippin price, this has come after the meme coin had suffered an extended accumulation range, which began back in March, lasting for 7 months in total. This allowed the meme coin to form a structural bottom that allows for the kind of expansion that has been seen so far. Yeah. All right. Let's see. I mean, yeah. Generally speaking, whenever an asset is like on the floor like that and can't go lower, you got to be concerned for a short squeeze. But when the short squeeze comes is anybody's guess. This would have been a good indication. So it's important to watch these averages. Simply because, like, if you're watching an asset and you do ultimately get that breakout close above, could lead to something. It doesn't always lead to something. Here was a breakout close above that ended up being a trap. Breakout close above, you got 2 days of continuation, but nothing like what you've seen here. Obviously, this is super volatile. Massive short squeeze taking place. It's a meme token, so most likely it's being manipulated. Probably getting closer to being done, or at least done on the near term, right? It could rally it could go into like a 3-4 week consolidation and then rally after that. But I would say the majority of the short squeeze has taken place. That is a massive move, man. Almost 2,000%, over 2,000% up at the highs. So insane move on Pippin, a meme token. That song almost sounded like, I'm on a highway, I want to drive it all night long. Oh, I hear sleigh bells. Never mind. I got the volume up so low I can barely hear it. Here we go. What's going on? What's going on? A little more dumpage. I wish it would go up and get me filled on that larger position size. This is like a nothing burger. Still not seeing XMR roll over here, which is kind of concerning. Bitcoin bouncing off of weekly support. Don't know if you're going to see any upside continuation from there. I would rather be a buyer down here, but clearly if price refuses to go lower than that, you could be a buyer there. It has not been able to break down below that price, or at the very minimum, it has not been able to close below that price. So it is support until proven otherwise. Fartcoin also bouncing. This is what we've been getting, right? A lot of just one dump and then rally. And then a lot of nothing, dump. Nah, not even a dump, but just a lot of chop. Large moves to the downside that go nowhere. Large move to the downside that went nowhere. Large move to the downside that went nowhere. Looks like it's being accumulated, but all the other data doesn't suggest that it's being accumulated. At least by long-term holders. Pull up the hodl waves chart. That's not the one I was looking for. Not that one either. Let's see what the short-term holders are doing. So they're buying. Short-term holders are buying. That's not great. Which one was it? See where the Z-score is. Z-score is almost back into buy or accumulate zones. Yeah, I find it very funny that we never really got back so massively overbought this cycle. That's why a lot of your 4-year cycle model like theorists aren't buying it, because we never got that big bullish expansion. I disagree. I mean, once an asset gets over $10,000 in value, it becomes very difficult to go up. You know what I mean? Like, you need so much more money to come into the asset. I forgot what the rainbow chart is, but it doesn't really matter. It's kind of the same as the realized price, because it's showing you like that's a good value proposition for Bitcoin. This yellow line here, it's always been a good value. So we're getting closer to that. Unfortunately, that line is down at 56K. And obviously it can go lower once it gets under. I'm not saying that will be the bottom. I'm just saying that is a very good area to start accumulating, because this is log. Bitcoin operates on log. And if you look at Bitcoin, let me pull up this guy's YouTube channel again, because he is fantastic with on-chain data. Oh, come on, dude. Let's go ahead and play a little bit of this video. A fantastic YouTube channel if you guys are into on-chain data. But he's got a level head on his shoulders.
Problem. You have an engineering problem. Now, if you've been watching my channel, you know.
God, dude, give it a break. Nobody's giving you money. All right.
They're anchored to the short-term price chart. And I get it. If we zoom in and look at the recent price action, we can clearly see that after that sharp drop, prices are now starting to consolidate again. But structurally, we're still trading well below trend. And crucially, we're well below the 200-day moving average. Yeah. Now, the 200-day moving average is one of those key technical and psychological thresholds that separates bull markets from bear markets in most investors' minds. It's widely watched and widely respected, and because of that, it tends to become a sort of self-fulfilling line in the sand. When prices above it, sentiment improves, and when prices below it, confidence tends to disappear pretty quickly.
There's the link for anybody that wants it. I'll also put it in the description if you guys don't know. I mean, he's gotten a lot of followers quick because he gives out really good data.
Quickly. And I'm sure you've all noticed that. So if you're expecting a fast V-shaped recovery back above the 200-day moving average here, I think it's important to be realistic.
Yeah.
That's probably not what's going to happen in the immediate short term.
And I'm not expecting that either, because of like how much liquidity was washed out. Open interest. There's still a lot of open interest on like options chains and futures and all that, but you smoked 35% of all of Bitcoin's open interest with this down move. I'm talking 35% of all of it. All of the open interest in Bitcoin with this down move. That's a huge deleveraging event. So whenever you get massive deleveraging events like that, it takes a lot of time to build that open interest back up. Once that open interest starts to build back up and it starts to reach, epic levels, then you start seeing larger moves, range expansions that are just much bigger. But for now, a lot of chop is exactly what we should be expecting.
Markets rarely move in straight lines, and Bitcoin is no exception. Especially after sharp moves like this, it tends to spend time chopping around, frustrating both the bulls and the bears before it decides its next large trend.
Not frustrating.
Now, for most people, this is where their analysis stops. Prices below the 200-day, momentum looks weak, and suddenly the narrative shifts to the cycle is over, or this time is different, or maybe Bitcoin's done. But this is exactly where perspective matters. So let's put our emotions to the side, because when we zoom out far enough, this entire move barely even registers. So if we zoom out here and look...
I mean, just a tiny little microcosm It's nothing.
Look at Bitcoin's entire price history. What feels like a major drawdown in the moment is nothing more than a small blip in a much larger long-term growth trend. And that's why I want to spend this video focusing less on short-term noise and more on structural growth and how to actually frame Bitcoin as a long-term asset, which is something I believe not enough people are focusing on.
Preach,
now, the chart most people are familiar with is Bitcoin's price plotted on a logarithmic scale, with time plotted on a standard linear scale.
Right.
And this is the classic long-term Bitcoin chart that you see everywhere.
Yep.
And the reason people like this chart so much is because it makes Bitcoin's exponential growth far more digestible.
Right.
On a linear price scale, Bitcoin's early years are almost invisible, and the recent years look absolutely absurd.
Yes.
But on a logarithmic price scale, each percentage move is treated equally, which gives us a much more honest representation of the long-term growth. Now, one of the most useful things we could do on this chart is draw a logarithmic regression curve through it.
Which is regression similar to the realized price, right? It's not exactly, but you've seen, if you've been on Twitter for any length of time and been in Bitcoin, you've seen the rainbow that does the same thing, right? The rainbow regression, where when you get near the bottom, it's time to buy. Well, we're not quite in that zone just yet, but we're close to that zone. Oh.
Accounts for Bitcoin's diminishing returns over time and gives us a smooth curve trajectory that represents its long-term growth path.
And it's perfect.
And this is already far more useful than looking at price alone because it removes a lot of the emotional noise.
You're within normal volatility. It's perfectly normal volatility, what we're going through. This downside move that we've experienced on the near term, completely normal.
But we can actually take this one step further. Instead of plotting price...
This is where he gets crazy with it, which we can't do, or I can't do on TradingView. Break it down, brother.
On a logarithmic scale and time on a linear scale, we can also put time on a logarithmic scale.
What?
And this is where things start to look.
Okay, so now you can't do that, or I can't do that, but he can. But anyways, now look at it.
Pretty different. Now, this type of chart looks a bit weirder, right? And it's much less common. And I probably bet that most casual investors haven't seen this one before. But what it does is allows us to transform Bitcoin's long-term growth into something that can be approximated by just a straight line.
Boom.
And that straight line is what's commonly referred to as a power law.
Power law.
This is where a lot of people get completely stuck when it comes to understanding Bitcoin's crazy price appreciation as an asset. People look at the price history and just assume it's random, speculative, or just purely hype-driven.
It's not.
But if you understand power laws, Bitcoin's behavior starts to make a lot more sense. Now, if you don't have a background in mathematics, then this might all seem like Fugazi to you. But actually, there's a lot of things in nature that follow power law distributions.
Yes, there is.
Now, most things that we encounter in everyday life follow what's called a normal distribution.
Curve. Yeah, a bell
and this
curve.
is the classic bell curve, where most observations cluster around an average, and extreme outcomes are very rare. Human intelligence, or IQ, is a good example. Human height is another. And for these, most people fall somewhere in the middle.
Right.
And the probability of extreme outliers drops off very quickly.
Yep.
But not everything in nature follows a normal distribution. In fact, many complex systems follow power law distributions instead.
Logarithmic.
And a power law describes a system that is in a critical state, meaning it's sitting right on the
things like that are logarithmic.
Boundary between order and chaos. And these systems are highly efficient, highly adaptive, and capable of producing extreme outcomes far more than a normal distribution would predict. And there are plenty of examples of this in nature, such as earthquakes, forest fires, river networks, or even the distribution of stars in galaxies, all follow power law relationships.
So I get it when people say, like what the person said earlier in the stream, they're going to wait a couple years. Well, that is perfectly acceptable. If you can buy anywhere under the power law level, they have all historically in time been really good places to be a buyer of Bitcoin for long-term growth, long-term accumulation. So where will it be? We don't know, but still, relative to value, relative to this, Bitcoin does really good at staying in trend with this law. So, yeah, lower, sure, fine, whatever. We'll be buyers here because long term, Bitcoin is being voted on and is being agreed upon as being money.
And interestingly, so do many human-created systems. The Pareto principle in economics, where a small percentage of participants capture a large percentage of the outcomes, is a power law. Venture capital.
Remember, Bitcoin has a halving every 4 years. That's what makes, like, this system, log price with log time, probably not going to work as, like, perfectly on something like the S&P 500, for instance. If you can do that, I'd be interested to see what it looks like. But because Bitcoin has a halving every 4 years, that makes Bitcoin's long-term growth logarithmic, if you will, kind of.
Capital returns also follows a power law, where a tiny number of investments generate the majority of returns. And Bitcoin also fits squarely into this category. Its price behavior does not follow a neat bell curve. Instead, it follows a heavy-tailed distribution, meaning extreme events are far more common than traditional financial models would suggest.
Right.
And this is why Bitcoin experiences violent drawdowns and explosive rallies. They're not anomalies, they're features of a system governed by a power law.
Perfect.
And it's not just price. The growth of the Bitcoin ecosystem itself follows power laws.
Yes.
The number of users, the number of addresses, the total computational power or hash rate of the miners securing the network all scale in predictable power law fashion.
Hash rate.
And as adoption increases, the value of the network increases non-linearly. And this is similar to how cities become disproportionately more productive and wealthier as their populations grow. And current estimates suggest that Bitcoin adoption today is roughly equivalent to the internet in the late 1990s.
I have that. Give me 1 second. Let me see if I can find it. Boopity boop. Boop, boop, boop. Is this it? No. Give me 1 second. Right here. Boom. There's your distribution curve of other various consumer goods. Is Bitcoin a consumer good? I don't know. Is Bitcoin a telephone? I don't know, right? It's a protocol. It's nothing, it's everything. But here is where we are on the distribution curve when it comes to Bitcoin. Like, we're the internet. So this is 90 to 2005 on the internet. Right here is the internet. Oh, what's going on? This stupid thing. Now I can't use a marker. What's up? What's going on? There we go. Okay. So right here is the internet to 2005. Here's the internet. This little line right here is your internet phase. So Bitcoin crosses where the internet is. So I said 1994. I would say it's closer to where I'd say 98, right? So for us, you know, boomer children, we were alive when the internet became a thing. The people that were born post 2000, they don't know a world without the internet. People born pre-90 do. We remember the world pre-internet. We remember the world pre-cell phone. Everybody was carrying pagers, and then you had to look for a payphone, right? So we know where the internet was back in 98. Windows 94 came out, then Windows 95, Windows 96, all the way up to 98. So Bitcoin is literally just getting started. Literally.
Around 1997, if we're going to put a year on it. And that doesn't mean Bitcoin will follow the exact same path, but it does give you an idea of how early we are in the broader adoption curve. Now, bringing this back to the main point of the video.
Like, that's the risk on Bitcoin. That is the risk. We don't know that it gets mass adopted. Like, that's what has to happen. People actually need to put their money in Bitcoin and then spend Bitcoin instead of money. Like, that's what has to transpire. So we're still early on the adoption curve, but we don't know that it will be adopted. But we can look at the graphs with the power law, which suggests it is right on track to being mass adopted.
Power law models aren't about precise price predictions. They're about framing reality. And depending on the assumptions that you make, you can draw different
Merry
power
Christmas,
law lines.
Firefighter Marion.
Some are more conservative and some are more aggressive. In the base case power law model I'm using here today,
Hang on,
currently
I gotta stop him for a second because we are starting to get a little bit of a spike here on Pippin. I did not get filled though. It came very close to filling me. So this is where we want to watch this thing because, oh, see that right there? That's what I'm talking about. That's that dangerous blow your account type of stuff. That's a 5-second candle right there, boys. And that 5-second candle moved 3%. You are not quick enough to hit the stop loss button when something is this aggressive. And that's nothing. I've seen 30% candles in 5 seconds before. This thing is super aggressive. I did get filled. This is where I wanted to get filled on the secondary order. But this is what I'm talking about. This accumulation that transpires under the average, that is not what we want to see if we're anticipating a breakdown. We want to see the breakdown. We want to see a little bit of time of that, whatever, that chop. Then we want to see it leave the area. We never want to see the accumulation and then boom, because that means it isn't done yet. Buyers are coming in here, scooping it up. They are looking for another spike since day high is literally right there. It almost got it. Now look at it, chopping around here. It needs to get out of this area quickly or we're going to eat a stop. But that's that aggressiveness. That makes these things so dangerous. It's massively overbought. We know that the volatility is cranked up to 100 here. Like, you've got people FOMO chasing this thing on both the upside and the downside. But the downside clearly is not winning yet. Or you would not see these accumulation patterns take place and then these ginormous bullish spikes. It sucks. But that's all right. That's why we mitigate our risk. Here on the 5-second time frame, volume deltas are still negative. On the minute time frame, volume deltas have become bullish. 30-second time frame, volume deltas are still bearish, but they've kind of bottomed out. They kind of bottomed out down here. So you're not seeing that trending move to the downside. And that's what we need to see happen if we expect price to follow the same thing. But we'll see if it gets bought up here. If it does, we'll get stopped out and we'll move on. We'll see what happens then. As if it just stops us out and then immediately rejects, we can jump right back in. As we're only risking, well, we're risking a lot more now because we doubled up the position. So we're going to have to bring the stop loss down a little bit. So that's likely going to cause us to get stopped out. But we're okay. We're doing fine. We're up $1,200 on the account this week. So we can afford to lose $30 if we're wrong on this right here, right now. See how price just literally bouncing off that average. It's very simple to find out where the bots and algorithms are looking at. I mean, all I did was threw on that average and then started adding time to it until it got closer and closer to the bottoms. So if the sellers are going to win here, we definitely need to see this thing break back under and start to trend back under the average. As long as you're above the average, you're threatening a breakout. And all you really need for that to occur is a volume spike. And you can kind of see that happening. See how this delta is now starting to trend to the upside? If we don't start to see some of these big negative delta candles show up, then this is likely going up. This is likely going to stop us. We'll go back to him in a second. This just got really interesting really quickly, but I do want to finish what he's saying. So we'll play some Christmas music as we watch Pippin blow everybody up. See, that's what I was saying earlier about if you're good at managing risk, you can still make money on scalping this to the downside, even though it is extremely bullish. Because if you're getting in at the top areas of the range and scaling out or taking profits each time you come back into this average, then you can build up a profit margin or a wall, if you will. So that way, ultimately, when you do finally get stopped out, which is about to happen to us here, you've already made money on the trade, so it doesn't hurt as bad. But you have to take profits. You can't get greedy. You got to take profits. You got to. I was severely underpositioned, so I was unable to do that. Oh, it's going. This is another consolidation at the average. This is bots, algos. There's your fresh day high. I think it's a fresh day high. Yes, fresh day high. Not really seeing violent sell side volume show up here. Now you're back into short squeeze. There comes some big sellers. We can try to put one more position on here now, but it's got to be very, like, it's likely going to get stopped again because it's very aggressive. These are big spikes. If we can even get a fill. Super aggressive. It isn't done yet. We want to see it reject this price, and we want to see the selling deltas show us. Because if it accumulates here, it's accumulating higher. People are chasing. So that's kind of good. That's kind of what we want to see. We want to see volume confirm. Very aggressive. You just liquidated the day high, so it makes sense that it's just playing around here. Yeah. Just big volume. Boom, boom, boom. Boom, boom. Get that run up. I wouldn't waste more than 3 stops on this today. 2. This, if we get stopped out again, it'll be our second stop. I wouldn't do more than 3. Because your deltas on the higher time frames are showing you that the buyers are still here. Problem with super volatile assets is the floor can drop out of this thing just as fast as the ceiling can drop out of it. Or the ceiling can fall out. Like you get big giant spikes to the upside, you can also get big giant spikes to the downside. Because once it's done being manipulated, that's usually when the rug comes out from under everybody's feet. Big moves down. So XMR, there's your 30-minute close above the level where we're mitigating risk from on XMR. If it refuses to close higher 30-minute candles, then I might add to the short position here. It can obviously go much higher as the volume average price is up here, VWAP, for the weekly range. So that's the danger. This gap, if you will. But if it refuses to go higher, then we can say, okay, maybe this is it. Maybe the buyers are done. We got 3 minutes on this close. We'll look back on it in 3. As Pippin's still just grinding here. We don't want to see higher 30-second closes. And it's actually like if volume continues to trend up and price continues to trend down, that's also a kind of a good sign, maybe. There comes some of that sell side. Because everybody just got stopped out. So now they're climbing back in. But the fact that it isn't dumping could suggest that there's an iceberg soaking up all that sell side. This thing could trend higher all day long, basically. This is the spot that needs to stay like the high close. We don't mind seeing higher 30-second closes in here. We don't want to see higher 30-second closes above this price. If the asset is done going up, we want to see that be the high close. But obviously we're coming back down to accumulation zone. We are seeing on the small, very small time frame. Come on, let's make a fresh low. Let's get down to 41,332. That would make me feel a whole lot better about it. Do not like seeing it be accumulated. But this is where we should be taking profits. I'm still under positioned for that. I'm not doing that with this thing. It's moving way too much. We've got a $215 position size on it. So if it made a fresh low, that would be a profit target. Maybe? No, maybe not. I don't know. That is that 4-hour low, ain't it? Yes, it is. Okay, so this is the 4-hour swing low. It would not be a profit target. So still under positioned. The 4-hour is still just at 61 on the RSI. So I've got my stop out. I've got the position open. It looks like this. It's a very tight stop loss. I lost 20 bucks on the first position. I was way under position. This is a higher 4-hour close. That is not good. And it even closed higher than that high. That's not what we wanted to see. We wanted to see a close back down in here. It is possible that this becomes a trap later on, but I don't love it. So now this will be a supply zone if price breaks under it moving forward today. People will be looking to put shorts on there. But price first must break down, come down into here, and then reject that. We're still trying to stop people out. We're still accumulating. That's not a, I hate that 4-hour close. Because that makes this the new trading range. We can get rid of all of that. This is the new trading range. So just by closing higher, that made this the new trading range. So now positions will be added here and down here. And you could still see upside continuation. We got to blast through under that. That's a good look. If it can lose it, it's 11 o'clock in the day, so hopefully this was the final stop run. That was the boss spike. Hopefully it's the final boss. As we're playing on hard mode. All right, so I got my position on, I got the stop up, everything. That's all I can do, right? That's it. I can't do anything else. I can just wait and see what happens. So let's go back to, let's finish up that video because it's a good video.
Implies a fair value of around $112,000. And relative to that, Bitcoin is currently trading.
If you're just joining us, the power law, this white line, basically he's got price on log. He's got the date and time on log as well to give us a power law diagram here. So basically that's what he's saying is fair value according to this.
Trading at a 22% discount today. And if we want to be more conservative and look at the bear case power law scenario, that fair value drops to around $94,000. And in that case, Bitcoin is only about 7% below fair value today. But what's important here is not the exact number, but the context. If you look at the bear case power law line historically, Bitcoin spends a large portion of its life trading well above it. That means the market often runs far hotter than even the conservative long-term growth models would suggest. So the fact that we're currently trading very close to this conservative fair value line really puts things into perspective. It tells you that structurally, Bitcoin is not that expensive relative to its long-term growth trajectory whatsoever. And when we project this power law forward, the implications become even clearer. Under the base case,
truth Marcus, quantum isn't even a realistic threat for 10 plus years. I don't know if that's I mean maybe not.
Case scenario, the fair value for Bitcoin in 2030 is around $400,000. And under an extreme bear case, it's still roughly $330,000. And extend that out to 2035, and the base case puts Bitcoin at around $1.4 million, with the bear case still coming in at around $1.2 million. Now, you might look at these numbers and think they're wacky, but if I showed you this power law 10 years ago in 2015, when it was trading at $400, and told you that in 10 years' time, Bitcoin would be worth about $112,000, you'd probably had the same reaction.
Bro, you're smoking those big $50 rocks, maybe the $100 rocks. That's what we would have said.
So what seems like normal prices now will seem absurdly cheap in about 10 years' time. And again, these aren't promises, but they are grounded mathematical extrapolations that are based on long-term adoption and network growth. But charts like this, to me, aren't about projecting crazy price targets. They actually serve as a purpose to keep you grounded. They're not here to help you understand where we are in the cycle, but rather where we could be realistically in 5 or 10 years' time. And for investing, 5 or 10 years is not a long time at all.
It's nothing.
Even if you're in your 60s and you feel like you've missed the boat, a 5-year time horizon is still completely achievable.
Yeah.
The problem is not age. The problem is perspective. And if you're someone that's more similar to my age, well, a 5 to 10 year time horizon is a mere blip in your entire vesting career.
Why are you still suffering to hit
Why
your
are
protein
you still
goals?
giving me
Factor
commercials?
makes hitting your protein goals with meals packing up to.
Now, there's one particularly useful way to apply a power law framework practically, especially if you're building a long-term position rather than trying to trade short-term price swings, and that's by using a drawdown chart. Now, this indicator here takes the power law fair value line and measures how far price is below it at any given time. So instead of focusing on absolute price, it focuses on the deviation from the long-term trend.
Price is king, always. In the markets, price is king. I love this other on-chain data and mathematics and all this other good, fancy, awesome stuff. I like it, right? For long-term groundedness, for horizons of unachieved wealth. Yeah, but price is king. It's the arbiter of whether or not you make money, right? So obviously, we can also watch the power law in the future. If Bitcoin spends a long time under where it should be, then obviously at that point in time, one could realistically assess that the pricing mechanism inside of Bitcoin itself has decided that it is no longer going to be trending with the power law. That's what's so great about this analysis. Like, you don't really need a long time to decide whether or not it's true. You can just simply look at what it has done and what it is realistically going to do. And if it drops way under that and consistently trends under that, well, then there it is. It's not being adopted the way we thought it would.
And when price is far below the power law line,
It's a
the
powerful
chart
video.
shifts into deep red colors. These represent periods where Bitcoin is trading at a significant discount relative to its long-term growth trend. It doesn't matter whether you believe in the bear case, base case, or the more bullish power law model. If you believe Bitcoin adoption will continue to grow over time, then these are the deep drawdown zones that represent the most asymmetric long-term opportunities. This chart really doesn't care about what happens in the next month, the next 6 months, or even the next year. What it captures is the long-term mispricing relative to the adoption-driven growth.
Beautiful.
And historically, buying Bitcoin when this chart is flashing deep red has coincided with some of the best long-term entry points.
Ever.
And buying more aggressively as it moves deeper into the red has consistently rewarded patience.
Beautiful.
And right now, we're sitting in the orange zone, which corresponds to that roughly 22% drawdown from the power law fair value that we discussed earlier.
So more downside.
So does
can
that mean the
happen.
price can't go
Of
lower?
course.
Well, of course not. We've seen plenty of periods where Bitcoin has moved into deep red territory during the prolonged bear markets.
Right.
But if that happens, what it really means is that the long-term risk-reward becomes increasingly asymmetric in your favor. And that's the key takeaway. If you're trading short-term, this chart won't help you that much.
It
won't.
It won't. And also, like, you have to almost be in a prolonged downturn, like a big bear market. It's still way too early in this cycle to even say whether, I mean, you can physically say that Bitcoin is in a bear market. We're 30% off the highs. Regular stock market, 20% is consistent with bear market. With Bitcoin, it's a little bit more because Bitcoin is a whole lot more riskier asset. It's a lot more volatile. So 30%. As long as you're under 30%, you can say Bitcoin is in a bear market. But we don't know that we're going to see a long-term continuation of that trend. You could very likely see it chop sideways here for another 6 weeks, and then we never see this price again. You know what I mean? Like that. I'm not saying that's what's going to happen. I'm just saying that is in the cards for what could happen. You are where the buyers showed up last time. Now, given that, we are in the perfect scenario for the 4-year cycle model, and we are in a global liquidity downturn. And the global liquidity downturn isn't even like, if you look at the global liquidity chart, you've got all of next year where it can continue to trend lower. So we may be in a prolonged Bitcoin bear market given the 4-year cycle model and the fact that we're in a downturn on global liquidity. So it's either global liquidity that affects Bitcoin's price or the 4-year cycle model, one or the other. We can't put most of the weight on either. So we can say it's both, and it makes sense to hedge off any downside risk. It does. It absolutely does. I get it. So do that.
Tell you where the bottom is, whether it's tomorrow or next week. But if you're investing with a 5-year plus time horizon, then this is one of the most powerful tools that you can use to keep your emotions in check and make rational decisions when sentiment.
If you're looking to hold Bitcoin for more than 5 years, this is a buying up. Every weekly red candle from here on out is a buying up.
Is at its worst. Every major drawdown in Bitcoin's history has felt catastrophic in the moment, but with enough time, they all fade into insignificance. December 2015, 10 years ago, is a perfect example. Bitcoin was around $400 and sentiment was dead. And yet structurally, it was one of the best long-term opportunities imaginable. And the people who did well here weren't smarter or faster. They just understood time. One of my favorite quotes is that most investors massively overestimate what can happen in the next few months and massively underestimate what can happen over the next 5 to 10 years.
They do that with weight loss too. They do that with everything. It's human psychology.
So if you can learn to think in years instead of weeks, cycles instead of candles, and structure instead of sentiment, you can put yourself in the very small minority of participants, and those are the ones who tend to be rewarded in the end. Anyway, I hope you found this useful. If nothing else, I hope it helps you zoom out and reset your expectations, and remind you that time and perspective are the edges most people refuse to use. Anyway, I'll catch you all in the next one.
Appreciate it, bro. That's a good video, man. Good channel. I mean, I don't know what happened to Glassnode. They used to put out weekly videos. They've fallen off the planet for some reason. They don't do it as often anymore. And this guy decided to take it upon himself and fill a void in the market. And his channel is being rewarded. I subscribed to this guy. When I subscribed to him just a few weeks ago, he had less than 1,000 subscribers. He's got over 26,000 now. This video was put out 6 days ago, 31K views. His YouTube channel is doing massively good. Very good. I will put it in the description as well for anybody that's listening to my voice that didn't catch the live stream and was unable to get it. The link to the video from the chat, it will be in the description. So just click that drop down box and yeah, give him a follow, man. He's putting out good work, good stuff. I like it. All right, so here we are on Pippin. Literally the only thing that we were able to trade today. We're still watching XMR, but it's kind of doing the opposite of what we wanted to see for it to roll over here. And Pippin is also failing to roll over, but I mean, we'll see what it does. Here's what we're looking at right here. It's finding near-term support at the last 4-hour open, and that we need to see broken. We need to see this broken. If this holds like this did down here, then it's probably going up. And there's no point in looking for shorts on it. We do know that it's getting really, really close to topping out. We just don't know if it's going to be this week, next week, or the week after. And there's a whole lot of stops that can be smoked from here until then. So I wouldn't force the issue. If you're looking for trades on this, do not force the issue. We found a small edge on it this morning, but so far the edge is still working. They literally have been accumulating the 1400 simple moving average on the 5-second chart. You can see it got extremely volatile here a little bit ago. It's slowing down now, but only time will tell if it keeps slowing down or if it continues to push. Whenever something is this bullish and just trending up, then your buyers, the demand is coming in at higher prices, and that's what causes short squeezes to continue. So unfortunately, we may not catch this when it does break down, if it breaks down. Right? We don't know that it will, but we couldn't find any legitimate bullish catalyst to this asset. It is just a meme token. It looks like it had a long-term technical breakout, and that's been driving order flow. Like, that's all I can say about it. There is no legitimate bullish catalyst, like no burn, no anything. There's no tokenomics to it at all. No pumpamentals. It's just a technical breakout, and that caused more volume to come rushing in, and now it's been a snake eating its tail ever since, and it's been extremely volatile. But we'll see what happens with it. We think it's going to roll over eventually, and we had a technical setup on it. We got stopped on the first attempt, so we shot at it again. And we will potentially shoot at it one more time if it does make fresh day highs. Being down here, I don't think I will. Or let me rephrase that. How the last 4-hour candle closed, I don't think I will be looking for more short opportunities on it if this one gets stopped out, because this is another advancing candle with a higher close. That's typically bullish. So if you can ignore every line on this chart, literally, and just look at these two, if this candle cannot trend under this line, the bulls are still very much in control of this asset. Just look at how these candles work. When you trend, you trend. When you don't, you don't, right? Right now, you are trending. So you got to go through the whole break, stop trending, and then break down. So that could take 8 hours. It could take 10 minutes too if it gets rug pulled. But this is a very aggressive bounce at a technical level. So it looks like people came in and bought this thing up down here. And you're seeing upside continuation right now. You're not overbought. This is not negative. It's positive. So the buyers do have the asset. They do have control of order flow today. And then we looked at session volume profile. You finally have this migration higher. This could be dangerous if the bulls win here. So right now, the bulls are literally trying to defend a higher price right here. So if this goes, this volume, and it's mostly buy volume, will break it, right? It'll break out. It'll continue to go. Because these people, all these shorts, me included, will get stopped out, and that brings in demand. But right now, the shorts getting smoked, they are the demand. Whether they want to be or not, they are the demand. Their stops are causing this thing to go higher. That's why it's never a really good idea to try to short things that are overbought. I wish this was overbought on the weekly as well as overbought on the 4-hour. It is not. It is not. This is potential accumulation here. You're hovering on the 60. So here was the 50. That was your first breakout. So everybody was shorting here first, right there. This candle opened and smoked all those people. So look at what happened to it. So they were shorting at the 50. They were anticipating this pullback into the 50. They were getting short. They wanted to see the RSI roll over and continue the trend. Instead, that candle exploded to the upside, and then boom, so did the RSI. So now the RSI is accumulating. So this isn't a good look. The only way it becomes a good look is if later on in the day you get something like this, a breakdown and a close under, right? If this puts in this kind of structure, then, right, then you can see if the sellers come in here. If the sellers defend this area, then you can put on a short here. and then hopefully you get your move lower, right? Hopefully this ends up being what happens, but the last time you didn't really get a chance to do that, as this thing just exploded to the upside, went crazy, like 2x deviation moves higher, and then absolutely gave up the ghost. Chances are you're probably going to see something like that again because of how crazy this thing has been. But we'll see. I mean, as of right now, buyers are literally trying to catch it at support. We'll see if they are able to do that or not. Only time will tell. But I don't like this reaction here. It tells me, hey, at least people are watching the same thing that I watch. Keeping an eye on it. But, I mean, we're up a little bit. I could, in theory, close this trade out, or at the very minimum, I could close like 75% of the trade, and that would absolutely cover the first stop and give me $100 worth of profit. Not really what I shoot for. I'm generally trying to make about $300 a day and risking about 100 a day. So I don't know if I'll continue to try. I mean, I probably won't continue to try to short this. But I am going to be looking at XMR, as if it does start to roll over eventually, I want to get back in on that, as I am holding a short still here on XMR. I did take profits on that trade already. I took profits this morning. I already made that much or more on it earlier this weekend, as I bought it right here. When this 4-hour candle pulled back, I just set my buy limit right there. So that wick filled me. And then I caught all of that. I took profits on this move right here and made close to $700. Took profits, moved my stop to break even. Closed that trade out last night when this move happened because ZEC trended down all day yesterday. So I just felt like maybe XMR was next. So I went ahead, took the $200 off of what unrealized gains that I had, and then entered the short here on this high 4-hour swing high failure pattern, and then took profits on this candle here. I actually got out of it up in here, so I didn't catch the lows. I was asleep when the low was put in, but it doesn't matter. I made my money. So this trade here, oh, not this one, but this Pippin trade, this is just a freebie. Just a freebie. Like, I'm working on already a nice $1,200 buffer zone. So losing $30 on these stop outs, not a big deal. Not a big deal at all. So I'll hold it to see if it breaks down. And then if it were to do something absolutely bonkers and crazy and take out like this stuff down in here, let's see what a 28-cent take profit would be with a $200 position size. 0.28. It'd be 733% return. So damn, $1,500. I'll take that. I'll take that. I don't expect that to happen. My usual take profit would be like right here, but since it's a freebie, whatever. I don't care. But my usual take profit would be above this open. So if you shorted that high and you're holding it, I don't think you're going to get a move down to here, but I would set my take profit at about 37,784 or a little higher than that even, because there's no guarantee that you'll get down this low. But if it breaks this area of support and then breaks that low, there's a chance that it comes down into here. A chance. All right, so that's probably how we'll leave it. Let me read the comments, make sure I'm not forgetting or not answering anybody's questions. Everybody's been a little bit quiet today, which makes sense. It's Christmas. There's not a whole lot of people out there. Bitcoin going down, says Baca. Is this considered a Santa rally? I mean, every year people talk about the Santa rally. It's the week before Christmas. Technically speaking, is this a Santa Claus rally? Yeah. I mean, You didn't rally last week, but you're rallying into this week. I guess technically it would be considered a Santa Claus rally. The most, like, what I'm mostly focusing on here is this right here. This is huge right here. What you're doing today. This is why I have a bullish bias on Bitcoin today. Now, Bitcoin did throw out this fake out. I bet Pingu did the same thing. It did. It ultimately closed lower, and now you're retracing. Obviously, the structure still looks bearish on Pingu. Would I take a short here on Pingu if it retests this price today? Probably not. Probably not, because this is taking place. This is a fresh yearly low. What does that mean? That means the VIX is cheaper right now than it has been all year long for the entire year of 2025. So every second of Donald Trump's presidency, you are making fresh lows. This is uber bullish. But it's uber bullish for risk markets. Risk markets aren't uber bullish. Financials are. Financials are loving life right here. You've got XLY, consumer discretionary, also up. You've got communications trying to break out and head higher. And now you finally have tech defending December's VWAP. So tech looking good here. If it can take out yesterday's high today, that would be even better for tech. It would look even better for tech if it could do that. I don't know that it can, but it looks like they're trying to do it right now. And ultimately, the dollar weakness went away as it bounced off of the October open again. And then let's finally go look at TLT and see what that's doing. It was trending lower earlier. Maybe this is it. Maybe it's done. We'll see. We'll see. Did it even give us a trending move lower? It gave us one 30-minute close. Well, two 30-minute closes lower. So that would be an hourly. Yeah. You got a 1 hour close under that previous swing low that we were watching. And now you're bouncing. So if you start trending under this price, I would bail on this long. This could just be a dead cat bounce for now. It could roll over later on today and start to trend lower. It doesn't look like that's what's happening. It looks like a liquidation break, but only time will tell. Only time will tell. I mean, other than that, everything looks okay. Tesla failing to break out again today. And is it? Yes, it did take out yesterday's low. It's not trending under yesterday's low yet. But as long as it's making higher daily lows, which right now you've got a lower daily low, but if looking at this right here, like you got to come down here before it starts to look like this pattern is broken. The pattern is still intact. You could have literally just seen it liquidate yesterday's lows and then go today. Doesn't look like that's what's happening because you're continuing lower here, but it's trying to break out. It's definitely wedging up here at all-time highs. If it does break out and start trending, the sky's the limit. And the VIX is currently structured for a nice move on Tesla, but Tesla's a big proponent of the XLY. That's why this is up at highs right now and also pulling back. I'm interested to see, is Amazon also pulling back today? Because Amazon is also big inside of... No, Amazon's barely up today. It's up 0.9%. So Amazon is not having a down day, but Amazon bounced off the yearly opening range again and is moving higher. With the VIX on lows and making fresh yearly lows, I would anticipate a lot of upside continuation on a lot of stuff. It won't be on everything, but some things. I think Bitcoin could continue to rally if the VIX stays on lows. The other thing that is or was concerning a little bit this morning was the yen, but the yen bounced, but it's been since stopped. It hasn't gotten upside continuation. So we'll see what happens with that. And then this right here, do I still have that sell limit out there? I do not. Okay, I closed it. So this is where I'd want to see this hold. I actually wanted to see it hold here, but it's okay. If it holds here, I'm still looking for the downside break. I can add to the short position right here. I've already taken profits, so you don't have to take this trade, right? It's different for me because I've already been paid. The only thing I'm risking by jumping in here is unrealized gains. That's the only thing I'll be risking. Let me see, I got on $276 position, so I want to add $276. So that would be roughly about that. And I want to add that at this price, which is what? $450. Okay, so I'm going to add, I want to be in this with $500 at a cost basis of about $456, $457. So let's add that there. And then that'll bring, if I get filled, that'll bring my cost basis down to here. And that will also move my stop down with it. And then if I'm right, and this does act as resistance and XMR does roll over and give me another downside continuation move, because this is the December open. Let me be clear about that. So I'm literally shorting at support here. I normally tell you guys don't ever short into support. So if you do take this trade, your short side target has to be here. That's a 3.5% move. So there is money to be made in this range if it rejects here. All right. But you have to take profits here because we don't know that it's going to break December's open. This is where your longer term buyers, or at least the buyers that think if this thing is going higher on this, like this is a legit breakout. You broke above the high week close here. That's a legit breakout. The fact that you're retesting that area, that would be a buying opportunity for people that think this is going higher. You're not overbought. I mean, you're close to overbought, but you're not overbought yet. And all-time highs on this are up here. Oh, so that's the high week close. Sorry. Okay, so you're still not making high week closes, but compared to where it rolled over here, broke out, and then put in this bear trap right here. So that's potential support right there. That's the December open. And if you look at December's range only, like we're not going to look at any other data. We only want to look at December only. It's bullish. You set the December low here and then put in an expansion and then a double move. Like this is your secondary expansion. So this is your monthly range expansion here from 360 to 480. But this is consistent with just a normal correction. It is not a bearish move. Not a bearish move. If you break down under this and then this, then you can start saying, okay, maybe the top is in for the near term. As long as the December holds a support, the top might not be in on this. Might not be in at all. So be careful if you're taking this trade with me. This thing does not trade like others. It has clearly defied the bear market because Bitcoin rolled over in October, right? That's when Bitcoin topped out, October. This thing tested support in October and has been trending up ever since. Not bearish. Not bearish at all. You're overbought by a small margin. On the monthly, you're not overbought on the weekly. So, not bearish. It's not bearish. Not bearish at all. But we'll see what it does. And QQQ and SPS look heavy. I see another red week. Anyways, Merry Christmas. Well, I mean, they look heavy, but are they? Only time will tell. Only time will tell. I mean, they look heavy because they're not breaking out, making fresh all-time highs. So once it starts breaking out, making fresh all-time highs, does it still look heavy? It did look heavy to me. And if we looked, when we were looking at some of our, here, let's go out to the daily, maybe the weekly, and let's pull up our ratios and see what's going on over here. So XLK, XLP still chopping. Not great. This still doesn't look great. But even though you've seen growth versus value pull back last week, it's bouncing this week. The S&P's back up into here. So this does look a little concerning still. This looks good. And this is with oil rallying. Oil is rallying right now. So this is going up with oil. That means tech is stronger than oil. That's a good sign. SPY is stronger than the XOP. That's also a good sign. And then, of course, energy is weaker than the SPY. So there is strength in the markets. And then finally, let's look at the last thing to see if we're seeing it. Is it market wide or is it just the tech sector? Well, we know it's not just the tech sector because financials have broke out. Financials are making fresh all-time highs. So here's the equal weighted S&P 500. It's already broken out and made fresh all-time highs. This is without tech. So imagine if tech comes back in and starts to trend up. This is going up if that happens. If tech participates in this rally, that's probably why people think it's going to roll over, because tech isn't really participating in the rally right now. It's healthcare, it's communications, it's these four sectors that's causing strength. Tech isn't. All-time highs, close to all-time highs. But once tech participates, then it isn't weak. It's strong across the board. Everything. So hopefully Bitcoin can start to feel some of that strength. Hopefully. Merry Christmas to Wes, to you too. Good morning, Merry Christmas. Good morning. Quantum is a realistic threat for 10 plus years, and it's trivial to upgrade to quantum resistant wallets. It's not a threat. You're about an hour behind. Oh yeah, that's fine. There it was some news. Man, I don't know. Here, let me see. Oh, there it was. Shit. Two weeks ago, I think they got
Let's go.
new videos.
Zootopia 2 has everything.
I guess it was 6 days ago. So the last time that they made a breakthrough was like, what, 180 qubits or 450 qubits, something like that. $10,000 qubit processor achieves 100 times. The breakthrough's coming. It's coming fast. It's coming fast. Is it 10 years out? Maybe. I mean, it's subjective, but only time will tell. This thing is still not rolling over, guys. This is building in support at that 4-hour open. This is the level it needs to lose to get the bears on board. But think about it as a professional seller. Think about it if you're waiting to see weakness, or at least at the very minimum, a lower 4-hour low before you get involved. Because when this thing bounced, it hasn't put in a lower 4-hour low yet, right? So maybe they're just waiting for that to happen first before then jumping on, like on a supply candle test. You haven't got that yet. We did get a fresh 1-hour low since over here. Oh, you haven't made even a lower 1-hour low. One 1-hour lower low there, right there. Boom, boom. That was it. So this is the first real like sign of a break. You took out 3 hours worth of lows in that one, but then you went on to make a fresh day high. Literally, it looks like accumulation. It looks like it, but it doesn't mean it will be. Because remember what happened to the one we were watching yesterday. This one ultimately did break down. The one we were watching yesterday, and then we'll wrap this up. It literally grinded resistance out all day yesterday. So something like that could happen as well before it finally broke down. That breakdown move was a big move. That was a 19% move. So if you shorted here or here, you made decent money on that trade. But that's kind of what we want to see happen with Pippin. Will it happen? Only time will tell. All right, you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you guys trade smart. And as always, happy trading, everybody.